So we're joining forces now to talk about Arcimoto, of course. Q4 2021 earnings. Mark and company just did at Arcimoto. What are your overall thoughts? Were you happy? Were you sad?
Mixed feelings, to be honest. A couple of new information that we have been waiting for so long, like Capex guidance and so on. And yeah, the air is getting a little bit tight cash-wise.
Is 17 million is left?
Yeah, and in summary, in short, like we are now in a situation that I think they intend to and want to spend cash and invest in Capex, but we as investors, we don't know how they are going to finance that.
What is your major takeaway from the whole thing? Was it the capex? Was it the spend? Was that what you were worried about? That's the big thing?
That's the big thing, yeah. No big surprise there. So it was in the ballpark where we expected it to be. But I think we now have some number in a 10K filing that we can work with.
I had two issues. One was that they only have 17 million in the bank. I think that was correct. Which we know they're spending roughly 10 million, and they spent more this last quarter. Was it 16 million? How do they survive past one or two quarters? That's my my problem here, because we keep talking about that there's a raise coming. They have 100 million they're trying to raise. I don't understand what they're waiting for. Like the sign from God says that you need money, right? And I think they're going to do fine in 2023 when the factory is sort of going. But if you need money right now, then I don't understand what all this waiting for. The stock pumped to 750, $8 almost. Wasn't that a perfect time to take a little bit off the table?
They actually did. They did raise, I think, almost 4 million last quarter, but that's not enough.
No, I mean, it just happened. The $8 just happened. We have to forget about what happened already a quarter ago. Do we even know when they raised, or do we have to wait a quarter to find out? How soon does that information get to us?
I think to some extent they can just issue a little bit of shares here and there. I'm not that familiar with the SEC rules. If they, as of a certain amount, they have to notify the public about that. But yeah, definitely they didn't raise enough in Q4 to sustain a certain cash level. Like the cash level was cut in half, essentially, like from 33 to 17 million. Yeah, you're essentially completely right. They need cash. If they continue to burn it at a similar rate like before, we're essentially now in Q2, right? So they are running out of cash right now if they don't raise.
Like, I don't understand. I really just don't get what this holdup is, because if you're going to dilute us when it's just higher, or when the stock pumps fine. Like, I understand it. As an investor, I still have my shares. You need to do this because I need you to survive. So I get the stock is going to get hit, and they're maybe trying to avoid some bigger hit.
They have plenty of options on the table, how they could raise cash other than just issuing more shares. And I think they also talk about that in the webinar that we're going to have a look at just in this very video, right?
Okay, cool. So we'll talk about that. And the second thing that worried me, I thought the ATVM loan from our last discussion back in December, I thought Mark said it's in. It felt like it's in, and then it's sometime this year we're going to find out an answer. But we found out on the Q4 call that it's not in.
I also thought that they handed it in, like they applied.
Right.
It sounded it's like essentially in the process of applying.
It feels like a step back. That's what I'm trying to say. Okay, so we'll talk about these things and more. Why don't we go to the video?
The key to scaling Arcimoto to mass production, therefore, first and foremost, is to make the platform itself more scalable. At our factory opening event earlier this year, we showed the first computer renderings of 1.x, Arcimoto's refined platform design, the ongoing development effort of Arcimoto and its critical industry partners, featuring both mechanical refinements and major simplifications in the electrical system. 1.x will unlock the big steps up in scale.
Okay, so that was one part about pushing to scale.
When are they starting to make some money on the vehicles that they sell? Until now, they have negative gross margins. They lose money on each vehicle they sell. And that new platform is a crucial part. Volume is another part. And commercial pricing is higher than consumer vehicle pricing.
Getting to profitability starts with a positive gross margin. So I wanted to talk about that and maybe see you guys expand upon that a little bit. So there's a couple things that I'm wondering about. At the Ramp It Up event, I was able to spend a lot of quality time with Sandy Monroe and his team, and you've talked about vehicle designs. The second thing is, and I was able to get a firsthand look at the new assembly line, but there's more to come with automation. So automating the assembly line would be the second part. And the third part, you've talked about getting the volume unit numbers. As you put more volume through that line, a big part, Doug, of cost of goods sold is always fixed cost depreciation. So it seems like there's a lot of drivers in place to get to positive gross margin, and then that would be, the key to getting to positive EBITDA and then EPS. Could you talk about that, please?
And I think, Barry, the one I would add to that, it's volume, it's assembly optimization, the hat vehicle design, that is the simplification of things like the chassis, and then ultimately, as we move to that mass production stage, it's really a change in material production method. As we look at the bill of materials today, it's the big chunk is battery, electronics, motors. I mean, that's the majority of the cost in the vehicle, and that's really what the 1.X program is all about. So it's really driving the simplification and ultimately automation of those core components of the platform that will be the first big step in the push to positive margins. The other piece of that is the work that Kevin and team are doing on growing the commercial opportunity. Is that when you look at the pricing structure of our commercial offerings, they're actually higher than our consumer offerings by a good stretch. As we put in place the tools that let fleet adopters adopt Arcimoto vehicles as an OPEX rather than a Capex, then you start to look at it in terms of what is total cost of ownership, but then also what is my monthly on the Arcimoto solution versus a delivery truck or a van or whatever. And we think that even with a higher sort of intermediary retail price, that we're going to be able to deliver a dramatically lower cost to businesses for those solutions. And that's why, I think as we go, particularly into next year, that's going to become, I think, a very big part of the business story of the FUV family.
The commercial fleet volume is going to start to take off next year. And for example, the Deliverator, this is essentially our bull case that we agree on, right? They mentioned that in the 10K filing, they are still remaining in, some pilot programs and so low volume. Also, this vehicle line is only going to start really ramping next year, right? And the 1.X platform as well, like towards the end of next year.
Right. So there's no point to make a Deliverator that's not on the 1.X platform, because they need to sort of scale that up if they're actually going to fleets. And the 1.X platform is not hitting January 1st of 2023. That is not happening. So I think there's still a long way. I think we're talking 2024 is when I expect to see any real commercial adoptance of this. I'm not saying that's terrible. That's just, I wish it was more clear, and instead of us assuming these things. You know what I mean?
I agree. I think volumes and all the new platform technology, new battery cells, 1.X, that's really going to start taking off towards the end of next year at soonest, I think.
To build off of this conversation, I want to show a little clip about the fact that Arcimoto is scaling their commercial, and they hired a new person for it.
And so today I would like to introduce our new VP of Commercial Operations and Strategy, Kevin O'Rourke.
My 15 years of experience in the automotive industry comes in many different arenas. As a recent addition to the Arcimoto family, I feel it's important for each and every one of you to understand what brought me here. The answer to that question is vision. Arcimoto is set forth on a journey to change the way that the world views commercial fleets, last mile delivery, and sustainability as a whole.
I really wanted to introduce this guy. I don't know if we have to listen to everything because he's sort of reading a statement. But what do you think about them hiring a new VP of Commercial Operations and Strategy? That's his title.
I think that's a very, very important position because, as Mark has mentioned just before, like commercial vehicles have a higher margin because they have a higher pricing power, right? And they also have a higher margin naturally because they are selling fleets. So you only have to make the sales pitch once, you do the logistics once for them. You get a whole lot of more, I would say, scalability through that program. And that's a very important position that they have now assigned to him.
But I wonder who was doing it before, because technically they were going out and doing all these pilot programs.
That's a good point, like that you mentioned the pilot phase, and I don't know if we got any new infos about that. They briefly talked about that they got some, learnings from these pilot phases with commercial fleets. That's one thing, but did they actually get orders in? We know the pre-order number. Financially or just from the volume wise, what came back? Like, feedback is great, but rubber needs to meet the road.
Yeah, there's not enough details about exactly what you're saying. But there was a good piece of news, like sort of buried. I do want to play this clip. This is important because your bull case and my bull case is still the Deliverator. At the end of the day, Deliverator and rentals is what really makes this business sort of sing and makes all the money and makes us our 10, 20Xs. That's what I think. I don't think it's the robo-taxis. I don't think it's the robo-valets. I don't think it's even the MLM just yet. Maybe it could be at some point.
A number of the organizations we are talking to about large deployments of the Deliverator are saying, oh, hey, we would also like to look at the mean lean machine for areas where we're currently using e-bikes for delivery.
He said large deployments, almost like an afterthought. Like it doesn't matter. It would have been nice to actually, like he keeps saying, get some color on it. I would like some color on this large deployments and how much is it? Who you're talking to? Yeah. Is there any letter of intent? Is there anything going on? Obviously, he doesn't want to tell us anything at this point. I don't understand why not. If he actually has a possibility of an order, I don't know. It seems like it's almost there.
Large deployment could mean anything. Large deployment relative to current deployments. So 10 vehicles would be large.
Oh, I see what you're saying. Right. The numbers could be totally skewed. I'm thinking thousands and it could be like tens or right. You could be right. Okay. I was taking it as a bigger thing.
They also told us that already. They are aiming, correct me if I'm wrong, but like they are aiming for 80% of market share for the e-bike market in the US, right?
80% market share?
Yeah, like something stupid, crazy high. But even if it's way lower than that, like 10% or so, I think the US e-bike market is like 1 million vehicles per year or so. So they would also already go with 100,000 units sold each year, insanely high. Piece of the puzzle that's missing until now is how are they going to produce all these trikes if demand was there. Actually, that's something I can't understand right now. I mean, they're focusing on ramping up the FUV platform. Like that's a whole separate program. How is that going to happen?
Interest in the mean lean machine has been considerably higher than I anticipated. I was targeting in my head about 1,000 pre-orders by the time we launch production. In just, I think, about 5 weeks, we now have more than 700. And I attribute that to a few factors. One, it's totally kick-ass. As a career product developer, I can say it is always awesome when an early prototype exceeds your own expectations. Second is that the e-bike market continues to rocket, fueled by the rising gas prices, I think, and a growing awareness that we as a culture need to right-size mobility. And then the third thing is that we see a huge potential for commercial delivery using this platform. A number of the organizations we are talking to about large deployments of the Deliverator are saying, oh, hey, we would also like to look at the mean lean machine for areas where we're currently using e-bikes for delivery, better carrying capacity, more stable, higher speed. There's a lot of benefits that the mean lean machine will have versus current electric bikes in areas where, very dense metropolitan areas.
I'm going to play one more part and then we'll talk about it. He talks about the actual pricing and it's all over the place. It's not actually 2 to 3K. That's when at scale.
I'm anticipating a tiered approach. So if you look at the e-bike marketplace today, you have sort of very premium e-bikes in the $8,000 and up range. Of course, we think the mean lean machine is going to be a premium vehicle in this class like no other. Then the kind of the sweet spot that we see in the market is in that anywhere in the 3 to 6 range. And again, we would see that kind of mainline being probably closer to the high end of that range. As we get to sort of true mass production of the mean lean machine, we want it to be, and this would be more of a very base model. We'd be aiming in the 2K, 3K range.
The 2 to 3K is not actually happening for a while, I think. So even though I thought I heard that in the call when I first heard it, it sounds like it's 3 to 6K. That's the window that it's going to come out in.
I think they are targeting the high-end premium market with just from the start, like to start with the most kind of pricey option first, like Tesla does it all the time. Like there's a new product, start with the, highest option, high-end option first and work your way down. And then the 3 to 6K, that would be the highest volume thereafter, I think. And price-wise, I don't know, like you pre-ordered one. Are you happy with this price?
Don't mind the 3,500 so much, maybe even 4,000. I'm not happy like personally paying for that much, but meaning that I could see people buying it, especially the beginning 5,000 people, 10,000 people, because if you really want a device, then you're gonna pay a premium for it when no one else can get it, and you're one of the few who can get it, right? I think there's an audience there that will pay more. I'm the guy who probably might pay up to $4,000. I won't pay $6,000. I don't think so. I'll just wait until it drops. What happens to my pre-order, I don't know if I can hold it and keep going, but I think I have a limit of probably around $4,000. But other person might say, I want this at all costs, you know? But I'm not a big e-bike person in the beginning, so it's not like I'm buying $8,000 e-bikes. I'm not doing that. But it's good to know at least that it's 3,000 to 6,000. I think that is a proper price to start with. And I actually estimated $4,500 that it would roughly go for. So it seems like it's going to be in line. The 2 to 3K doesn't seem like it's happening for years.
Who knows? Yeah, I think that would be a really sweet price. I think they really could drive volumes with this one. Very competitive. Especially if you look at the product and functionality, build quality, I could imagine that this will be a very, very good kind of deal for consumers. 3 to 6K, I don't know how much demand they'll get at this price point.
Discord, we were talking, I thought they probably had 5,000 pre-orders, but it was 700, so that was kind of low. I actually expected way more. What did you expect?
I also expected way more, at least 4-digit number, especially if you compare to the FUV. The FUV is a much more, niche form factor product, a completely new market, something that people aren't really used to. The e-bike or e-trike, if you will, is much more common as a form factor. Also price-wise, again, like even if it's like $3,000-$4,000, that's way more affordable than an FUV. So I expected more, but I don't know how much really marketing they already put into the MLM. I think we could see some bigger campaign as they near start of production towards the end of the year. Who knows? Maybe we are going to see 5,000 pre-orders by then or so.
This shows me actually one thing. Not that the product is bad. I think the product is actually really good. I think their marketing is poop. Like it's just not. It's not getting the word out. The only people who are interested in this are me and you as investors, basically watching it. They don't have that that cachet that like Tesla has yet. That like whatever product Tesla comes out, it's all over the internet. People are talking about it. Besides investors, just people are in love with the product. So I don't know how to get there. That's a hard problem for Mark to solve. It's definitely marketing. I'm not sure what kind of marketing, or even just getting more exposure in some interesting way. I don't know.
Yeah, through rentals. I mean, that's a very smart move.
Yeah, but that's a one-to. The problem with rentals is it's a one-to-one type of a thing. So meaning I have to want to go rent something, then I have to go know it exists to rent it. I think that's a problem in terms of just getting the word out that the MLM exists. And you're right. There's a lot of people who would probably pay the $4,000 or whatever, $5,000. I think they should have had 5,000 pre-orders if enough folks knew about it. I feel like not enough folks know about this. I'm no marketing guru, so I have no idea how they solve this besides spending money. But then if they have to spend more money to advertise it, do they have a budget to do that?
I think they have a small budget, but not close to what it should be in order to be very effective. I think I would agree with you that if there are consumers out in the market that are looking for e-bikes and they knew, hey, there's like an e-trike from Arcimoto, they would be highly interested in that. But I would be almost certain that 99% of consumers that are looking for e-bikes do not know and are not aware of this product that exists.
E-bike. Let me just put what happens here. Okay, so America's #1 brand. So I mean that's the other issue. Like you're going to get a bicycle, Yeah. And that's the search term they have to hit. I don't think there's no one's going to be searching a mean lean machine.
No, absolutely not.
Yeah, imagine someone typing mean lean machine. That's what I'm searching for. That's only the investors searching for that, obviously.
Exactly.
So Arcimoto has to connect somehow. This link, every time someone searches for e-bike, that should be up there.
Yep.
I'm no guru, but definitely they should be paying for that, for this e-bike search. Literally,
some Google ad spending.
No, honestly, e-bike, boom, the first link up there, advertised, a mean lean machine, a picture of it. It looks cool. People would click it because it looks cool. I think they got to do something like that. I wonder if they're not ready to do that yet. That's also the other thing, right? And I'm bringing up a calculator for a reason because let's say this is, I think I estimated 4,500, right? He said 3,000 to 6,000. I'm saying 4,500 times 700. So that's, what is that, 3.15 million? Yep. Does that make a real dent to them if they do get that this year?
Not really compared to current revenue numbers, yes, but compared to revenue numbers as they ramp. I mean, for the current year, they have the goal of selling 1,000 FUV platform vehicles. So they got something like $20-ish million in revenue. 2 or 3 millions more or less. Well, that's fine, but That's not moving the needle.
Right. Well, it's year one, so I'm picturing that they can massively scale that up. It seems like a 10 million plus business easy.
Yes, if they can sell a couple of thousand of them each year, that's, I would say, between 20-30 million dollars in revenue. That's not nothing, but compared to the FUV numbers, it's going to be a very small share. Maybe that's what I would be looking for, is their margin on these MLMs would be better than the ones on the FUV because it's more simple to build. So it could be a smaller portion of revenue, but a big portion of profitability.
Oh, the amount of money they make per pound on this, they said the same as a Hummer, which is around 130,000 or so.
Yeah.
He said we could make $400,000 to $500,000 for the cost per pound. Basically a 4x on a Hummer's actual amount of material in it, if that makes sense. Which I thought was a great figure. That seems good. Same material, 4 times the money.
It will be easier for them to kind of ramp this product. It's less capital intense. I could imagine. There are some information missing and definitely some demand missing, and really to kind of start making assumptions. Okay, that's going to add this amount of revenue for sure in a couple of years from now. I think we're too early in the game for that.
How long until the FUV can be sold at sub 15K prices?
We have targeted a sub 15K kind of entry level base model price for when we are at that full capacity output of the ramp, which is 2025 is where we are targeting that kind of maximum output capacity.
15,000, which we've been estimating next year, I think I was at least, starting to at scale, is not happening till 2025.
No, I'm not surprised. You can't do that until you're profitable, until you're self-funding. You cannot lower prices. Otherwise, you run yourself out of business, right? Completely unnecessarily.
You're not surprised that it's all the way to 2025, or maybe it could have been 2023, 2024, somewhere in that timeline?
Yeah, I thought in a best case scenario, maybe late 2023, but probably more 2024 was my assumption. But I'm not surprised that they pushed that out to 2025. I mean, if they're ahead of schedule with margins and profitability, they always can pull that forward, right? But I'm not surprised that they really want to scale the new platform 1.x and really scale volume and then get to profitability. And after all of that happens, maybe lower prices a little bit. But I don't know. Do you have any infos about the new federal EV tax credit?
No, we don't know anything about that yet. Nothing has come out that I heard.
Because obviously this will help them. This could kind of offset this later than maybe some expected price decrease.
That's true.
But instead you get a tax credit, I don't know, starting next year or so. That would help them tremendously, I guess.
My issue is by 2025, this is the point. I'm thinking a lot of Chinese companies will be in America. I'm thinking a lot of like those little smart car things that China's good at producing really cheap. Maybe not in 2022 in terms of being ready and road legal in the United States. I think they would be by 2025. And that means that car might cost not $20,000, maybe that car is $25,000. So now you're actually competing against a same price four-wheel vehicle with 4 doors, air conditioning, the works. It doesn't make me feel that's a good point that they're keeping prices high.
Though the positive effect that will have is that people that are thinking about getting an FUV don't postpone the purchase. Because it's so far out, you have to wait 3 or 4 years. If you want to buy an FUV, you have to place your order right now. If this price drop is expected in 1 year, 2 years maybe from now, you are thinking about, okay, let's wait some more months. Maybe you'll get this benefit.
You have a point, absolutely. And probably I would take the FUV delivery sooner, knowing that they're never really going to drop the vehicle price like I thought to 15,000.
Initially for this year and maybe also for the most part of next year, that doesn't even matter because they have like 5,500 pre-orders already. So adding more pre-orders makes the waiting line longer. But after that, I think a year from now, 1.5 years from now, they really need to get more pre-orders in. They need to scale demand.
Yeah, I guess it doesn't matter for 1 year, but remember, if they do make 7,000 vehicles next year, like he keeps saying, and they only have 5,500 pre-orders.
Yeah, they're getting through the pre-order waiting line towards mid next year, I would assume.
Remember, and half those pre-orders are going to go away.
Maybe.
I don't think it's 100% we'll just take it. It's easy to put down a $100 deposit. That was easy for me.
Sure.
But now when he says in a year, hey, your vehicle is ready, you got to pay up 20,000 plus whatever taxes, $22,000. There might be an investment I want to make, like in, I don't know, maybe Tesla stock got a hit went down again. Oh, if Enphase, have you seen what Enphase has done? We brought Enphase back into the episode.
Yeah.
Are there any plans to expand into markets or build factories in India or China where moto-type vehicles are extremely popular?
Yeah, we see the world as ultimately the Arcimoto market. It makes the platforms we are building, whether you're talking about Europe or Southeast Asia, you've got dense cities with crowded streets, already high adoption of smaller form vehicles. We build vehicles in that category that are super awesome. And so we think those markets make a ton of sense, not just for distribution, but for production as well. We hired Dilip Sundaram, who is our Chief International Business Officer last year. And I think later this year, we'll have some interesting stuff to talk about on that front.
They hired Dilip already more than a year from now, I guess, or so. And we haven't learned anything. What is the result of his work? And it's interesting that they will provide an update soon. I think Mark commented on that in another video recently that they are planning already for new factories in other places and countries. I feel that in their planning, multi-year planning, there are already other factories in other locations that they are kind of planning.
This is us wildly guessing, but Philip is probably going to places he knows like India, right? And working out a deal with, remember we talked about that they're going to license their technology or do some sort of a partnership? Arcimoto itself will not build a factory in India or China. They are working out with people on the ground who can and do some profit sharing or a licensing deal or something. I think that's what's going to happen because Mark said, I just want to get these things all over the world as fast as possible. I still think that's a great plan. I just wish we had some information on it.
I think countries like China and India, they also have special rules and laws in place. I guess in China, you have to build a joint venture in order to do business with a Chinese company. And I think in India, they have some local production requirements or so. So it's pretty complicated. And that's also one reason why Tesla hasn't entered India yet.
When will the ramp start rolling out new units? And what is the expected output by Q3, Q4, and into next year?
So Ramp has actually already output new units. The two pieces of that of Q1's production that are keeping that very constrained are one, was the shift over to the ramp, and then second, the validation of new battery modules. The move over is done. The validation of new modules is almost done, and we expect that early in Q2. So we are slow rolling out the door today, but starting, I believe, the internal target is April 20th for the new modules to begin production again. And at that point, we'll be cranking it up. We have not given guidance and are not giving guidance on quarter by quarter this year, but we are, as I said in the video, we are planning on basically tripling production this year. So we did, I think, 331 units of production last year. Doug, is that right?
Yes, that's correct.
So we want to break into 4 digits in 22. And then as we get 1X on the road, that's going to be what unlocks our big scale steps forward, aiming for a 7X of this year, next year, up to maximum capacity by 25.
That clears up our confusion that we had after the Ramp It Up event. We didn't know like a 3X, then a 7X. What's the reference point there? So we know now 1,000 this year, 8,000 next year would be their goal.
The one thing we should mention this, we started the year last year, he said 500. Then we went down to approximately 400. He amended his guidance.
Yeah.
Now it's 300. Look, it's hard to make things. I don't want to beat down the company. I'm an investor, but if you're not going to make the things you say you're going to make, don't say it. This is probably why he's scaling back his discussions on certain things, because he's like, I can't keep making promises I can't keep, basically, right? If he said last year we're aiming to make 300 and then he made 331, the stock might actually be higher. Because that mattered, right?
Setting expectations, right?
Yes. And if you set them a little bit lower, that's fine. I think Wall Street would react better. Like, oh, they're beating guidance. They're growing a little bit faster than we thought, as opposed to you're growing slower than we thought. You're having more cash burn. It's a different narrative, right? The story matters.
Yes.
And as we noticed with growth stocks in the last 3 months, 4 months, there's a lot of narratives that are just shifting around. Nothing to do with fundamentals of certain companies, but these narratives keep playing themselves out where they're affecting stock prices massively. PayPal, Square, massive drawdowns. Business fundamentals have not changed at all.
Yep.
So, yeah, the story matters.
Tesla has learned that's the hard way, but they have learned it.
When will the new project launch? And I assume that's referring to the Mean Lean Machine.
That would be my assumption as well. We are targeting end of the year for the official launch and sale of the first units of the mean lean machine. And again, we're likely to start with what I would call a very signature series version of that product. When we show you what we're doing with the next round of prototypes, I think you will understand why.
It could be $8,000 even, because he mentioned in the beginning that the premium models are 8,000 of e-bikes, right? 8,000 plus.
Yep.
Maybe his signature series is 8,000, 10,000. And then I am in no way buying one at all. I am out of the running for the $10,000 MLM, you know? If I'm getting an FUV for 20,000, why would I buy a 10,000 MLM? It wouldn't make sense for me.
We'll see. I'm a little skeptical regarding the launch of production. End of the year, that sounds very, very aggressive. And at the same time, launch like the new facility, the new factory production line. That seems a lot on his plate.
One thing I thought was happening was that they were buying machines to make sort of a streamlined ramp.
Yep.
And it seems like they do have some machines that they put in place, like the plastic forming thing, but it seems like they took the machines from the old one, the old amp, put it in the new one and called it a new factory.
Yep.
Okay, I'm glad we're on the same page here.
I think they added some new machinery, yes, but
it sounds like nothing's changed really fundamentally. That's what I'm saying.
Yeah, I think these are not the new production lines that they have in place. A couple of new machinery that kind of produce some new components like the plastic forming, but I don't think that they completely changed the production process at all.
It's still a manual process to get each MLM out. And I was hoping Sandy's work would like show bigger dividends. I guess it's slow going. It's engineering. I understand. It's really hard. It's not that I want to skip that part. I do want to give a positive here for Arcimoto. Everybody says that someone's just going to come in and make another three-wheel machine like Arcimoto and just take over the market. They spent 10 years developing the technology. Like they have all of this research and effort, trademarks, patents. For someone to just come in and take them, it's easier to buy Arcimoto at 200 million than just no, honestly, like pay them the $1 billion or $2 billion, get rid of the leadership at Arcimoto, take them over like a big company, I'm saying. And that's much easier to do than anyone else coming up with a new device and trying to beat them. That's not going to happen unless China comes in with a ready-made car at 2025 for like 25 grand. That's a different story, but no one's taking over this three-wheel market in the next 6 months or the next year. So I think everyone in the Discord could calm down. That's not going to happen. It's really hard to do that.
Where is Arcimoto at in the ATVM loan process, and when do you expect a decision?
As I kind of mentioned in the financing section, there are a couple of pieces. One is that what we are putting together today is really a holistic approach to fully fund the business plan to scale. The ATVM is one part of that. We see that really coming in. And Jesse, I think you can add a little bit of color to this, which is that as we have continued to bring on rockstar talent and refine with Monroe, it's really meant a cost shifting of a lot of the big expensive pieces of the program until next year and beyond.
They provided Capex guidance in the 10K, roughly 35 to 40 million in each of this year and each of the next 2 years. And now he's saying that a majority of that is going to shift towards next year. So what he's essentially getting at is we haven't got the loan yet and we won't need it until next year. Am I wrong?
No, he's saying that, but why? Is it because you can't even get the loan until you have like this plan for massive manufacturing, that you can do this at scale? So they can't even really apply until they can do this at scale. Is that it?
Maybe. We don't know. Maybe like Sandy Monroe and his team aren't ready yet to kind of provide this data and like the exact plan of machinery. Therefore, they don't want to apply because they want to maximize the return of this application. But anyway, like they need money now. They are going to burn through at least 40 million from operating negative cash flow. And as they've guided, 35 to 40 million anyway in Capex. On top of that, they need, I would say, 100 million this year alone.
Maybe I can start off with a question just on I'm trying to get some kind of feel for the cash outlook or the margin outlook for the year. Any kind of ballpark you can give us how much you might burn this year?
As we look at the spend over the next 18 months to get to what we see as sort of positive run rate on the company, we look at that total over 18 months as being, I want to say 100 million ballpark. The bulk of that is in Capex. I don't consider that burn. And actually, I don't consider even the spending on the people and development as burn. I consider it investing in the future. But as we look at all of the different pieces of that sort of holistic financing puzzle, that is the number that we're landing on. And that gets us, we believe, if we execute well, and this team has been executing at peak performance, that would get us to a positive run rate for the company. Now, there will be additional scaling and investment that happens after that, but that's a significant near-term milestone.
What does he say? Positive net run for the company? What does that mean?
As I understand it, positive free cash flow.
Positive free cash flow, but still not profitable.
Yeah, on a GAAP net basis, maybe not yet, but the cash flow is the important part there. And they also put a statement in the 10K filing that they intend to reach this point of being, they quote unquote say self-funding at a run rate of roughly 7,500 units per year sold. And that line is in line with the 2023 volume guidance, right? A 7x from the 1,000 targets this year. So it adds up. The question there still is, how are they going to get the funding?
Let me ask you the question. How are they getting the 100 million besides dilution?
Multiple options are on the table. The one that I would be most would favor would be convertibles. And Mark talks about that briefly at 15 minutes, 15 seconds.
Convertibles is one. What's another option?
Traditional debt with one of their partners.
So more debt on the books. Okay.
Issuing shares. I think convertibles are the better option here. If they can get a low interest rate on them, they get cash instantly and they convert it back to stocks later on at a better price compared to now, which means less dilution for shareholders.
Okay, let's explain convertibles a bit just so even I get it better.
Yeah, Tesla, for example, Tesla used to have, I don't know if they still have, but they definitely used to have a lot of convertibles, which essentially is just, cash that you get for these convertibles. So instant liquidity. So you survive in the case of Arcimoto. Fancy way of taking on debt, but you don't necessarily have to pay that back as cash if you hit a certain conversion price, or let's call it a strike price. So people understand options, right? Mm-hmm. If you hit that conversion price or you're way higher with your stock at a certain point in time, have the option to convert these convertible, therefore the name, back to stocks. So it's like you had issued shares now, but in the future at a better price, but you get the money already now. And for that kind of gap, you pay an interest. For example, one of my other companies that I'm invested in, Lithium Americas, does it exactly the same way. And they have refinanced their convertibles. They used to have a top peak interest rate of 9%. And they brought that down to something like 2 and something percent. So if Arcimoto could get some convertibles at, let's say, maybe 3-4% interest rate, this would be great.
A question to follow up even for the audience. So let's say you get 100 million convertibles. Mm-hmm. You still have to pay an interest monthly on it, correct? Yes. That's one. Number two is, I'm assuming you're saying the stock price has to go over, let's say over $10 or whatever it is. And for example, so are they then converting that to stock at the $10 or back at the $5? Because it wouldn't make sense that it's at the 10 for the person doing the convertible. They would say, well, I still want the $5 price. So it seems like you're diluting the shareholders just later, the same amount.
Later, but less. So they convert it at the higher price. And that's also very beneficial, obviously, for the investor, right? They can say, hey, we want to get stocks and not the cash.
Why is it a higher price? It could be the same price that it is right now.
Yeah, it could be, but then you cannot convert. So this optionality only is in place when you meet a certain conversion price, right? So the idea is now the stock is in the toilet, right? So the investor and the company are agreeing that, okay, let's set the conversion price at $10, at $15, whatever. And we agree if we hit that conversion price at a specific point in time, we have the optionality to convert and not have the obligation to pay it back in cash, right? And that was the discussion back in the days with Tesla. They had some obligations coming up that they had to pay back in cash because they didn't meet the conversion price and they were running low on cash already. So there's the risk then when you take on convertibles, right? You have the interest that you pay and then you don't meet the conversion price and you have to, pay it back in cash like you would with traditional debt.
Are these short term? Are these like 3 to 5 year type of debt?
Yes. Traditionally, companies where the stock price is really in the toilet, like everyone feels like we are so undervalued, that's when convertibles could make sense. You just have to find someone who has trust in you and believes in you and invests in you and gives you these convertibles, right?
For 14 years, Arcimoto has been financed incrementally, building value far in excess of our spend. And our ATM facility that we have with Canaccord serves as a backstop for this approach. It lets us be opportunistic when conditions are favorable for our investors without entangling us in toxic deals that plague the microcap market. That being said, we think the time is right for a holistic solution to fully fund the business plan to scale, including the right tools for the job. This includes targeting the DOE for big production capital expenditures, and most of that will land in what we're calling phase 2 of the ramp development process. So that's the build out of that does not start until next year. Also fleet financing for our rental vehicles, proper real estate financing, and then also long-term strategic equity partners. I have great confidence in the team that we have assembled to tackle this effort, and I look forward to sharing more on this front soon.
Do you think he's already worked out some equity partners, as he says, and that's why he looks not worried?
Yeah, because I mean, look, we talk about that. They have $17 million in the bank. They burn roughly that amount per quarter, and they used to have that amount at the end of last year. So we're through the first quarter now. They have burned that roughly. And they won't get the ATVM loan, or they won't need it until next year. So how are they going to get through this year where they need 100 million? So they have to have something in place right now that they will tell us in the next couple of weeks.
I mean, they better, because it's game over, isn't it? Basically. Well, not game over, but you have to dilute immediately.
Yep.
And the stock will tank $3, $2, whatever it'll go back to. And the shorts, they're still piling on. The short interest is even higher now.
Yep.
Especially after this quarter. Like, you saw the stock drop 20, 25% one day. In that, I just want to point out, by accident, this happened. Because I had a buy order for 10 options. Let me show you this.
Oh, no. Oh, God.
So I just want to point this out, because it's funny, because I left in a bunch of options. And so this is what I wrote. It's been there for a while, for like 30 days, 50, I forgot what it was. It's been there for a while. Like, I think you have 60 days where you can leave a good till canceled order. And I left it in, and the stock dropped without me paying attention. And I bought 10 options at $250, which is not a bad price. So $5 strike 2024. That means if it's over $750 and they're not bankrupt, these options could do really well if I keep them. But I wrote I'm not sure, because I was looking into other stuff. I was buying other things. And I wrote this was basically an accidental purchase. I had left this in the account as a limit order and did a good till canceled, and it executed today after a month or so of sitting around. Totally forgot about this. I may or may have not keep it. Looking at another investment, not FUV right now, as we talk about, like the PayPal and Square, and there's some other things I'm looking at, even Facebook.
Yeah.
But, right now I have 10 contracts for 2024. I'll add that to my stack. So now I do have an extra 1,000 shares supposedly in the future if I keep it, assuming this shoots up to the moon. So I thought that was funny.
Congrats. All right.
This shows you do not leave good till canceled orders if you're not actually prepared to buy them. Okay.
You didn't talk too much about today was the rental program. And rental will give you a recurring stream of revenue. You've talked about rental first. I think there's 2 company-owned locations and then 5 partners, but you've said you want to, pun intended, ramp up that program as well. So could we talk a bit more about that, and how significant might that be in terms of revenue generation in 22 and 23?
I would say the first goal for us is, and I think we're now up to 8 rental, either or company stores or rental partners in the market.
I might as well point this out. So these are the rental places right now. I think Hawaii is not on here. That's what he's talking about. California has 2 places. Florida has 4, and Oregon, their main location, is 1.
We have Hawaii coming online here very soon. I believe we're targeting May 1 to get our lease in place, and then that's going to let us actually unlock Hawaii both for sales and for rentals. Hawaii, Southern California, Florida, those really are beachhead markets, no pun intended. The first goal is brand awareness and sort of the try before you buy that is pretty much a requirement for almost everybody purchasing a motor vehicle, right? So almost everyone wants to actually try it before they are willing to sink a lot of money into a purchase. And we think that long-term, that rentals is not just a way to provide a way for people to try it in beautiful places, enjoy it for a day, but actually to become break even and then ultimately profitable. The typical new user, first-time user experience of a vehicle actually comes at great cost to a traditional vehicle manufacturer, whether you're talking about the sort of the franchise model of automotive, or the company store model of this is Tesla has been the real pioneer here, but then you've got Rivian stores and Solo stores and Lucid stores. So you're in those scenarios, you are either putting out a chunk of the margin or you're putting out a lot of OPEX and CAPEX that never comes back other than the sale of the vehicle.
8 places. Have they been broken down into how much they're making per place, or is anything like this happening in the 10Q?
Not that I'm aware of. They just, state the number of vehicles in these rental operations, which was 59, and then 54 in other so-called fixed assets, so pilot phases or so, internal use.
I mean, someone's got to be renting this at some point, right? Because they have Reef, they have these locations. I guess the numbers are so low that they're like, let's not put this in the 10Q. Is that what's going on?
I think the total rental revenue is in the 10Q. It was
what
like
is it?
70 something thousand.
For last quarter, for Q4.
For the full year. Yeah, $76,000 in net rental revenue. So that's the revenue split from last year. So that's the full year, $4.4 million in revenue. In total, almost $4 million from sales. 262,000 from Tilting Motorworks, the Trio kits. They sold 19 Trio kits. And then 76,000 in net rental revenue.
Well, also, to be fair, it's 59 vehicles, not in day one. It was probably 59 vehicles at the end of the December. So
yes, exactly.
It could have been 76,000 basically made in the last couple of months.
I think it used to be 41 at the end of the third quarter, and now it's 59.
I don't want to ask for any quarterly guidance, but because we're on March 31st now, could you tell us maybe how many you might have produced or shipped in the quarter that's ending in a few hours?
Terry, how many did we build and ship out of the ramp?
And completed about 25 vehicles in Q1, in spite of the fact that we were moving from one factory to another, setting it up, doing all of that. I think about 8 of those have come off the line in the ramp. That's where we're at. It's all testing. It's dialing in the processes. It really wasn't even expected to be any this quarter, but in the act of making the move and dialing it in, we did pull that many off.
25 vehicles. What did you expect? You said you didn't expect any vehicles?
In that ballpark, like a couple of dozen.
He says 8 off the ramp. He means the new facility, 8 came off of the new facility. The rest were at the old facility then?
Yes, correct.
So it's still operational.
It used to be, I guess. That would have happened in January. As they have moved the machinery, as we've discussed, I think that's now starting up in the new factory. And when we put the numbers together, they want to get to 1,000. Well, we have 3 quarters left, so that's an average of 300 in each quarter. I think they're going to start off at maybe 100 or so in this quarter. So this puts for the third and fourth quarter a pretty exponential ramp if everything goes smoothly.
Do you think they're going to hit their 1,000?
No. Honestly, no. Honestly, no.
The predictions
Prove me wrong. What do you think?
Yeah, I mean, they have not shown a track record of hitting the numbers they claim. And if you don't have the new process and the new machines in place and you're not actually scaling, that's what I feel is not happening. So if you're not doing that, how are you supposed to produce over 3 times more vehicles? Unless you just get more people on boots on the ground, just manually cranking them out. But then is that an efficient use of the time? I don't know. Because that's a huge cost, right? Just to do that.
What I'm most worried about is their supply chain. They already had supply chain, bottlenecks at let's call it 80 vehicles produced each quarter. They really need to step up the game in order to get to a couple of hundred per quarter.
A double, I think, is a lot easier. So I'm saying maybe 600-700 seems like a lot more doable.
Yes, for sure. But I think financial wise, that's for the first quarter now, this low number isn't that bad because they can still ship some vehicles that they have produced in the fourth quarter. They don't have that many costs in the first quarter for production. So financially, this could give them, some room. Financially, that's not that bad because again, they're at a negative gross margin. So they produce less vehicles. They, limited their losses, therefore.
I wonder if they actually limited any losses because I think the people who were paid, they're still being paid for January, February, March, even though less vehicles are produced. Maybe their objective was to move the equipment over, but those guys are still getting paid the same rate they were getting paid. I don't think Mark has fired anybody. Let me put it this way. I think he's only been scaling people. So it's getting more expensive, not less expensive. Even if no vehicles go out anymore, I feel like there's a big cash burn happening no matter what happens at this point.
Yeah, that's sure. That's for sure.
Like and subscribe to both our channels. But what are your thoughts, your last bit of thoughts on on this Q4 2021 earnings?
Running low on cash. We need more infos about how they are getting more cash very soon.
I mean, like
options.
really soon, like 3
Really
weeks, 4
soon.
weeks from now, right?
Yes. There are options on the table. I have confidence in Mark and his team that they do have a plan in mind, but yeah, I would expect such an announcement happening very soon.
But I think the 1.x platform is where the actual ramp begins in 2023. I don't even know when they can get that equipment in, because it seems like none of that is happening until sometime in 2023. So I feel like they are at least 6 months behind. At the end of 2022, we were going to have this ramp happening into 2023. And I don't think that's happening anymore until later. So it's really, I still believe the story. They just need the money to finish this next year or two. As soon as they get the money, whichever way they get it, whether it's diluting us, whether it's, like you said, convertible bonds, another investor coming in, or even a buyout, whatever happens, something has to happen really fast. And then I'll even be more confident about the 2023-2024 timeline.
Because last year they announced that they're applying for the ATVM loan, and we always thought that the ATVM loan would be the source of that funding. And now it seems like that's just, you know, something for next year, and they need to replace that cash flow with something else.
I think this is a big lesson for investors too. Let's bring it back to us. So I want to just let's go to TradingView. We are investors at the end of the day. This is not for our health. No one's investing in Arcimoto for their health. Okay.
Not in the short term.
Yeah. You know, we have a lot of bulls on the Discord, and I'm sure you have a lot of bulls on your channel who keeps talking, but this is a good lesson, and I still have to learn this all the time too. When something gets overvalued, like it did at $36, two things. One, we as investors should take profit always and get our money out, no matter what it is, even Tesla. And I have a price for Tesla at like $1,500, and I'm going to start scaling out some of my shares between $1,500 and $2,000. And remember, that equates to almost a $10,000 per share stock price. So I've been in this for a while. We have to start taking some profits. That's number one. Number two, the company itself, if they know that they're going to have a big cash burn coming up, and Arcimoto knew this. So this is my problem. Look, I'm a retail investor. I'm not a financial guru here, and they have all these people on their staff, 250 now. One of them couldn't have said, hey, Mark, we got to sell some shares at $36. So I feel those two things could have happened better, that over $20, doesn't have to be the top 36, but over $20. So retail people should have taken profits. Like me and you, we could have taken a little bit off the table, honestly. And I didn't at that price. I took off at 15, but I mean, honestly, at 36, I knew it was a little bit high. Like, that was, me and Carlos were talking about, this is too high. So, and Arcimoto should have taken some more money to sustain a couple of years of their growth. And then none of this would have been a problem. This wouldn't even be a discussion. I think those are the two things we can take away from watching this story unfold over like a year or two now. It's been a while since we've been watching. 2 years, right? I started investing in 2020 in Arcimoto.
I did, I think 2019 first time or so.
You're even longer. Wow.
Yeah.
And you didn't take any profits off the top too, right?
No. And in retrospect, this was a mistake. I think really the lesson that you're talking about here is money in the bank is valuable to startups, especially, but also to investors. Like when you can take some money into your bank, when you feel like time is right, nothing wrong about that.
The next time it runs up, whatever it is, $20, $30, $50, whatever your prices are, just have a clear exit. And I think people who aren't thinking that way and are always wanting to go to the moon, that's bad. You should just have a clear exit, a clear plan in place. And now I have my plan for Arcimoto, which I should have had before, and I didn't have it, to be honest. Which is funny. I have a plan for Tesla. I didn't have a plan for Arcimoto.
At what price level are you going to sell?
I'm going to have to judge this, how it plays itself out. But if it has a big run up the next time to $15, $20, I might say, I don't need all these thousands and thousands of shares. Let me take a little bit off. And if it comes down, great. I get to buy back in if I want to. And if it doesn't, I still have a lot of shares. That's my point. So I don't need every single share. I have other good investments too, right? Me and you have Tesla. Me and you have Enphase. We have Square. We have PayPal. It's not like we're sitting here 100% in FUV and that's the only thing we're doing, right? So I think we got to take some money off the table. A lot of people are not going to like to hear that, by the way.
You always hear that phrase like, I'm going to never sell this stock. Why not? I mean, you can't do anything with these shares at the end. When you take some money off the table, you can pay for a vacation, for a house, like for an FUV. As the stock runs up that much, that's something that I could definitely see happening. Like with Tesla, they sell just their stock and buy the vehicle instead with that. I mean, nothing wrong with that.
Me and you are heavily invested in the markets. Meaning, like, in my case, it's like 99.9% invested. I'm not even joking. Meaning in real estate, markets, crypto. I don't really have nice things besides like the computers you see right here. Okay?
Yeah.
That's about it. I really don't collect fancy things. I don't have a Maserati sitting. You know what I'm saying? I don't collect that. I don't care about that. So if I sell a little bit of Tesla stock or a little bit of FUV stock to buy an FUV, to buy a Tesla, maybe to buy a better house, is there anything wrong with that? And like some people treat it like there is a problem, like you're supposed to hold this forever. I'm not a maximalist. I just want to have a good life.
Yep, exactly.
All right. Well, like and subscribe to both our channels, please. Hope you enjoy the content. We both have Patreons. I hope you guys enjoyed this.
Yeah, thanks for watching. See you in the next one. Bye.